Please take your seats as we're starting the Leaders Agenda where online trading is headed, our signature leaders panel. Despite calmer times post-COVID, the industry seeks fresh income sources. Our experts will share insights, predictions, and captivating stories. Please give a warm welcome to the moderator, Andrea Badiola Mateos, Chief Commercial Officer at the financemagnates Group, who will introduce her panel.
Thank you very much. Thank you, Despina. Welcome, everybody, to our first Leaders Panel in this financemagnates London Summit 2023. I'm very excited to have a very large panel of executives. We have limited time, so instead of doing the usual and letting them introduce themselves, I'm very quickly going to introduce Andrew 10, Jan, Swissquote, Way, ATFX Connect, Charles, Saxo, Matthew, Finalto, and Iskandar, Equiti, financemagnates. Welcome, everybody. We're going to get right into it, so we have time for the panelists to share their knowledge with us. First question for everybody. The economy these days, the volatility, what is your analysis nowadays of the current state of the market? What do you foresee going forward? Matthew.
Once again, it's all about having a diverse product suite. It's all about being geographically diverse, and that way you can counter any adverse market conditions. Whether you've got a period of low volatility and you've got a very good STP offering, whether or not it's higher volatility and risk comes to the fore for many people, if the sweet spot is equities, if the sweet spot is index, if it's gold, it's all about diversity, and it's all about picking those niche markets that seem to be growing, tailoring and personalizing your offering, and then actually volatility almost becomes a secondary issue because you've got a really good diverse income stream right across your business, and that's what we're trying to do.
Yeah, for me it's markets have been very generous this year. If you look at the returns on some of these large indices, they've been very generous. So I don't think we should expect that for 2024. And to your point, I think that for me, platforms and wealth managers, in fact anyone, the key is multi-asset, being able to manage your risk, priced fairly on a good, slick platform that's mobile friendly.
Iskandar.
I think the nature of the markets this year has allowed brokers to become a lot more efficient and have a significant better understanding of their risk modules, their risk appetites, of their client demands as well. Multi-asset is definitely the way forward. I think there's significant consolidation of larger brokers, and your clients' demand are diversification. So what the traditional asset classes are important, but then digital asset solutions are also something that we've been looking at to diversify clients' portfolios and take a larger share into client wallets. We've been going through a growth spurt, so we've grown in terms of around 40% in our volumes year on year. So that kind of substituted for the market volatility that existed over that period of time. But you'll always have to adjust, pivot, move towards market demands. I foresee the market conditions remaining the same over the next 12 to 18 months. Brokers have had to adapt and optimize. I think that's been great for us in terms of efficiency, optimization, better understanding of opportunities, and I'm sure many other brokers have gone through something quite similar this year.
From my view, I think Charles mentioned a very good word, generous. The market is very generous this year, and also very challenging as well. There's up and downs for some certain instruments. I think as a broker, responsible broker, how to control your risk, how to control your cost is a main topic for this year, probably next year as well.
Andrew.
As the sole technology-focused provider on the panel, people often say it must be nice to be in a market-neutral company or not exposed to markets, and unfortunately, we have to sell to all of you guys, so we're exposed to it at some level. This is another interesting year where it's not a subdued volatility environment, but you guys have operated businesses in a very ranged market, especially over the course of the summer, which our observation across a wide array of hundreds of brokers and banks in different segments and areas of the world is the volume's there, the ADVs are there and growing, but the opportunities to yield and make money from that and optimize that flow are challenging, as Iskandar put it. And it might be G7 FX, it might be in indices, there's different opportunities to extract value, but in the premise of the question of where do brokers look for more opportunities to make money, the The opportunity is the same as it's always been. It's within the flow and what you're generating. How that's done in a market that's not bounding this way and that and more privy to a B-book model, I think is a big topic of discussion with us and our clients now, using different hedging strategies, finding different ways to guarantee flow or value from flow in a ranging market.
Jan.
Okay, then I can collude. That's nice. So I agree. It has been a challenging year so far, but as a bank, it's a bit a different situation for Swissquote. So for us, it will be a record year. Why? Because we are truly multi-assets. You can trade, you can invest, and of course, we can also earn money on interest because of the deposits. So at the end, I think it's a good year. And this is also what we see from the market. So really, the interest in interest rate products is there, and we can serve that because we can build our own structured products, and we can basically offer what is needed based on the demand of the client. So actually, we are looking quite optimistic in the future, and I think that when you look at the client sentiment, I think there is good reasons to be very optimistic.
I think you all agree on the optimism in the market. Focus on diversification. Don't put all your eggs in the same basket, and risk management, very important. Iskandar, you touched on a point where you said that there is some consolidation of the market. So I want to jump into that because there has been a lot of different movements in terms of actors in the market. We have all seen collapses and mid-sized companies just stopping operations. So it has been a very good year for probably the big guys. How do you interpret all of the movements that we have seen throughout 2023 in terms of the actors, the brokers, the financial actors? Is it consolidating? Is it becoming a more mature market? Is this only temporarily? What's your analysis?
I mean, as you described it, it's consolidation with the larger brokers. And I think what we described, in our last panel was the maturity of companies and the maturity of brokers. Long-term strategies, the importance of governance, the importance of risk understanding, counterparty risk understanding as well. I think many of the brokers here are in the same boat in terms of embedding governance at the heart of the organization to be able to navigate through different times. And that becomes more challenging for the startups or medium-sized who are mainly revenue-driven focused and less kind of long-term 5-year, 10-year strategy. This is part of what we described as well. I think the industry is maturing, the industry is growing. One thing I always say is trading is becoming a lifestyle. It's no longer an investment. So that's why there's so many new participants coming into that market, which opens up the eyes of regulators naturally. Even so, it has been open on this industry for some time, but also demands significant responsibility, accountability for brokers. And it's who is able to adapt and invest into those elements which are necessary for growth and for maturing within the industry.
Matthew?
I echo a lot of what you're saying, Iskandar, and I think what we see is an increasing vertical and horizontal coalescence around a smaller number of bigger players, and getting access to more of that value chain, whether it be right from the individual retail customer down to providing interbank liquidity through payment services, through marketing, through all sorts of different allied products that you can offer. I think each of those present a different way to try to monetize different types of client flow. And we talk a lot about how things like regulation have had a negative impact on the business, but really what we've got to focus on is giving people in emerging markets exactly what they need. And that is a multi-asset offering. That is something where we can go and see how other people might do it. We can all learn from it. But at its heart, what we have to do is take what we do well at our core and then expand that across the world and up and down the vertical.
Charles?
I mean, for me, there are two parts to that question. So at Saxo, we have two parts to our business. We have the direct and we have the institutional part. If you look at the trading part, the reason that companies have failed this year is because, one, they didn't have the right products, two, they didn't have the right regulations, and three, they priced it wrong. And therefore, I think we need a proper debate around pricing. The thought that you can do this for free, it's an oxymoron. Free trading is an oxymoron. It is. And so therefore, I think that to offer to offer good services that are well regulated, they're well products with good education, that costs something, and that needs to be factored in. And the second part on the partnership side is what we're seeing increasingly, and our institutional book is growing dramatically, is where wealth managers, banks are working out that they are good at areas of their business, but there are other people who do other parts of business better, whether it's a single technology stack, access to multi-asset instruments. So my view is 2024 is the year of the partnership.
I think Charles hit the nail on the head there. It's the challenges that we see in today's market regionally, new areas of opportunity in assets or specific client demographics. Those challenges are opportunities. I agree in observing consolidation in some of the more typical markets in Europe or Cyprus as part of Europe. Of course, in the Americas, we've seen it. In the Middle East, in Southeast Asia, 1-0 is seeing a vibrant ecosystem of startup brokers. Even today, 15 years into servicing this market, we're still seeing innovation, but that's coming with a necessity of focus. Increasing regulatory hurdles, complexity of offering multi-assets means it's probably not time to be starting up a combination institutional technology / broker marketing entity out of the box in one of these new areas. Finding where your speciality is, focusing in on, do I want to be an entity going after client flow in this region? Do I want to be a technology provider servicing a broader area of the industry? I think we're learning in an industry that there's consolidation in certain markets. Our observation across, again, a globally distributed base of very different and diverse clientele is the demand at the root of why we're all here, the desire to speculate or invest or engage in financial products is there and continues to grow. Capturing that, more challenging, requiring more focus, and again, the era of the one-size-fits-all. Before 1-0, I worked in retail technology sales at a company called Circuit City, and people would always ask the multifunction printer scanner, why don't I just buy that? And it's the same as the shoes that were rollerblades that were ice skates. They were bad shoes, bad ice skates, and bad rollerblades, and the multifunction printer is a bad scanner, a bad printer. Focusing on what you do best, I think, is how you address the opportunities in today's market.
I think from our point of view, as a fast-growing company, one of them fast-growing company, I think we kind of embraced the consolidation this year. We acquired licensing in Australia and another one last week in South Africa. And also we got our license luckily from UAE this year. That's, for us, is good news because we have seen some volatility in the market and also in our industry. I think for some company, you have a strong capital or strong base. It's time to acquire some good asset and also client base as well. From what I heard, in our industry, there's a curse, 4 years cycle, right? Retail clients, they probably have 4 months lucky, and our broker have 4 years lucky if you don't have a proper risk control system. So I would advise people in our industry still surviving, try to think about how can we plan longer, how can we conquer this curse.
Yes, I think there is a lot of players that earlier on they were trying to bite more than they can actually chew. And at the end, it has become a consolidation of the industry, maybe less of the actual type of actors. But I fully agree with what Andrew was saying and the rest of you as well. And it's about being more specific and choosing your niche. Like you need to be niche specific. Okay, next we're gonna talk AI because
actually I don't agree with that.
Okay.
I don't think you should be niche. I think you need in this world you need multi-asset. And multi-asset is broad by definition.
It can be niche on your clientele. Like, yes. For example, you would choose Latin American markets.
Brokerage, as opposed to moving into different aspects of different businesses. But I also challenge that. So from our perspective, we've been heavily focused on governance, which allowed us to branch out into payment solutions, which added a lot of operational efficiencies internally. And today we're branching out into digital assets. We are very strong in terms of understanding our governance and allocating resources where necessary. So it'll be an interesting debate in a year's time to see how some of those projects flourish. And if Andrew's right, then we'll open this to debate again. I hope he's wrong, though.
There are a few things that all of us have to do well. And that is our niche. Whether it's offering liquidity, and that goes right to a retail markets.com customer or to our very biggest institutional customers, liquidity is at the heart of what we do. Allied to that then is technology, is risk management, is having the right people. Put it all together, that's your niche. Your niche is much, much wider than just one tiny little facet of that. It's an offering, and your offering has to be superlative in every respect.
Yeah, I agree. You want to add something, Charles? Regarding the products, 2023 has been a crazy year when it comes to very quick evolution of the application of technology into all of your products, ours too, AI. It started with ChatGPT about this time last year, and then it became more democratized and everybody started using it, and it started branching out into a billion applications and all of these brainy ideas on what you could do with AI. How has it been for 2023 for all of your businesses? How have you adopted or not AI into your businesses?
Maybe I start this time.
Go for it.
So I think AI is, of course, it's a big topic for all companies, and I think it's something that comes naturally in all areas of the business. So it's from marketing; it will be much more personalized. We will produce much more. It will be more relevant. It's from customer service that you can be here 24/7 with chatbots of good quality. It's in terms of the client, so that he has more trading tools that can help him to take better decisions, that he can help him be more successful, and it's in risk management basically also. So it's really around the board basically that you have to adopt it, but I don't think that you need a dedicated AI strategy. You need to have the talent, and you just have, like always in the past, it's a new tool, it's a new possibility, and look what is your objective and implement it if it really adds value and makes sense.
I think I gave this similar stat a few months ago in Cyprus, and I stick with it today. I think there are 10 to 100 times more AI startups and initiatives within entities attempting to utilize AI for the sake of utilizing it than there are relevant data sets that can actually feed and empower a generative AI or regressive machine learning or neural network model. So this question is a perfect segue from the previous conversation, because despite being put on a pedestal of innovation, regressive machine learning algorithms and some of the core fundamentals of an AI strategy are not rocket science. You're not building the Webb Space Telescope. There's libraries, there's prior art. The challenge is the results. The intelligence that comes from these exercises is based purely on the information in the data set you're utilizing. And if you're building this and using AI or developing AI on a limited data set, you're going to get limited value. And this is where focus comes into play. As a vendor with purview over many different clients and an understanding of how to manage large data sets, we're able to feed back to our clients who should be using AI, but probably shouldn't be developing their own without understanding how the value of the data set is going to inform the decision or inform the information or analytics that come from it. And I think that's a very key distinction that needs to be made.
I agree with Andrew on that, and I think we've been heavily focused on redesigning our data architecture to be able to embed AI through the right avenues within the organization. AI is a hot topic. It's a key word that everyone likes to use, but the true utilization of AI is complex in its nature. Unless the data architecture is clean, unless there's a true single source of truth, it's very difficult to optimize that throughout the organization. How we use AI today at Equiti is through closed data sets, which is on the marketing side, on the trading side in some parts, but to truly optimize that, you have to have a full redesign. We're somewhat of a young organization. We've been around since 2017, but we still face legacy. So it is a sizable task to be able to have that right architecture built on a longer-term strategy. We've been redesigning our architecture now for maybe 12 months, and we should be coming into a space where we could utilize and embed it across the whole organization, from account opening, client experience, further embedded into the trading avenues, but it's a sizable task to get that to life.
I think my fellow panel members have discussed bottom up, so I think I'll approach this question from top down. I think the way I view AI is that I agree with people like Elon Musk, Jeffrey Hinton. I think that AI has the ability to do great good and great harm. And as a result, it needs to be thoughtfully regulated. And I'm a believer in it's thoughtfully regulated. And the people who regulate this need to be the smartest people on the street. Because it is just a massive subject. So that's my top-down view. It will transform businesses. And if you look at C-suites now, C-suites have to have a view on AI. So if shareholders come to you and they ask you what's your view on AI and you stall, you have a problem. So therefore you need to have a strategy on that. But that does not mean it's a license to onboard people like McKinsey and all the other consultants, because it's a consultant stream. They can develop you huge strategies on AI. So my thought process on that is don't get distracted. It is very, very important for your business, but don't get distracted on it. And then in markets, I'll throw this out here now. I think the markets have thrown in 10 years of AI, 10 years returns of AI. And so therefore, as you view AI instruments and AI stocks, manage your risk.
From the top down look, I'll just point out we have 6 CEOs on the panel with a bias that OpenAI just fired their CEO last weekend. And so we're all wondering, did they fire him because they haven't figured out how to monetize AI at the largest and most prolific innovator in the world? Or has the AI replaced their CEO and we're not going to need to be here in a few months? So the world doesn't change too fast, but by the time we get to Dubai, if we're all still here, I think we'll know that maybe even OpenAI is having a struggle to figure out how to take this innovation and idea and really apply it and monetize it properly.
There's a joke saying the people in the future travel back to save us. That's just one reason some have this kind of news. But I want to throw a question to here. What does GPT stand for? Anybody knows? So I Googled as well.
No,
It's a generative pre-trained transformer. So that shows, at least for me, the knowledge of AI in the public is still limited. So from my view, AI for now is still a marketing tool. I said before last year, before September, before June, the hot topic was crypto, and the market needed a topic. So what is topic? AI. But what does AI do for us? From our experience, some probably analysts can search using ChatGPT for the articles. Some people probably can use that for the videos, for the pictures, can be generated quickly, and then only provide efficiency for our work. So how the AI can change or transform our business, our life, I think is not going to happen in the next 5 years.
I agree, and I think one of the things that we've got to remember is that it still requires somebody to ask the right question. It still requires a relatively smart person to understand and interpret the data and implement the findings. It's kind of only as good as some of the questions that you ask. If you ask something too nebulous, you're going to get a nebulous reply. So we have to be very clear about how we want it to impact on our organisations, how we want it embedded in the technology at every single stage of the customer journey, and how we act on the results and the findings. And so I think there's a reasonable chance that most of us will still be here in a few months, Andrew.
I completely agree. I think it's really important that really in the business that you ask the right question. How can AI help you? How can make it more efficient? How can add more value for the clients? And I think the whole discussion of philosophical or whether AI is good or bad, you can have this discussion, but at the end you have to start implement it where it makes sense. Otherwise you're going to have a big competitive disadvantage if you don't do it. So I think there is no other way. Luckily, there are good tech providers that can help, so you don't have to have the experience, but at least you need to people who know it, and especially on the C level. So I think it's very important.
And I'd say that's one of the things that the Finauto has been, whether it's luck or design, has been successful with, because we have our own technology. So it's relatively easy for us to get the smart people to build directly into our technology. If you're stuck with some legacy technology or something that you can't easily amend or edit yourself, you're running second there.
Since we have touched upon regulation, we were talking bottom up and top to bottom. Charles, you brought it up. We're going to continue on the regulation side, because I have a lot to say about AI as well, but I think the audience deserves to hear all the other topics that you can bring value to. So when it comes to regulation, there has also been a lot of different changes this year, in the UK in particular, since we're in London, ASIC, etc. How do you analyze the track that the regulators are adjusting, everything that has to, for example, we're talking about AI, but finfluencers, for example, has also been one of the things that started to be kind of regulated. Marketing policies, it has changed a lot in the last year or so. How do you see the evolution of regulation going forward into 2024? Charles, maybe you want to start?
Yeah, thank you. I think first of all we need to recognise that we operate in one of the most energetically regulated markets in the world. So the FCA, I think, are one of the most energetic and focused regulators in the world, and me in my role, I support them in that. But that means this goes back to the whole pricing of your business. I think to run a good business, you need firm foundations. So you need to be on 100% on top of CAS. You need to be 100% on top of consumer duty, operational resilience, transaction reporting, all of these things. So you need the right people with the right mindset, because businesses do not grow unless they have firm foundations and are well regulated. And I think for those CEOs amongst us, you know, and it's not just me, all CEOs have received 2 letters in the past 2.5 months, where the regulator has laid out their position very, very clearly on consumer duty. And that's a clear message. You better get it right, or we will come and doorstop you. And therefore, I think that good businesses do compliance and regulation well, and that's not changing, and that will just continue into 2024.
I agree with Charles. I think there's a duty and a responsibility, and I think that's part of the consolidation discussion that we've had. The complexity of regulation has only grown, but also the number of new licensing jurisdictions has also expanded. What we've seen with the increased regulation, this hasn't slowed down traction for this market. It's only grown significantly. And it's about working alongside the regulators in building the right ecosystems and protecting the underlying investors, underlying clients. We've been in jurisdictions where legislation didn't exist, and there was a significant amount of problems arising. Once regulation came to life, that we've seen a huge transformation in terms of investor protection, in terms of working under the guidance of those regulators. So it's expanding. FCA was one of the leaders within this segment, and it continues to be. But we're seeing multiple regulations across a number of different jurisdictions, taking the learnings from the FCA and embedding down accordingly. Now, there's also we're working alongside the Dubai Digital Asset Association in helping draft legislation for digital asset regulation. So I think that's something that's about to come more so in the UAE that they're looking at. And I think that's a significant point of interest across the globe as well. How are we regulating digital assets, and how are we expanding and taking the learnings from what we've had from this space into those other spaces as well?
I think a very interesting dichotomy that exists in the market today, and in the, kind of to bring a few of these questions together on the topic of focus on what you do well. Regulators regulate well, I guess. They legislate well. They're not technology innovators necessarily. But bringing that into the topic of AI, if there is one entity in this entire ecosystem that has a normalized, trade-reported, comprehensive data set across all of the entities that they manage, it is the regulator. I think, I wish I was sitting here saying I believe and see a trajectory of innovation where AI is going to be used in regulation more prevalently, and we're not seeing that. We're not getting it messaged. I would love to speak to regulators. I didn't receive any letters. I'm on a fortunate side of this conversation, but an unfortunate position to help propel that innovation. I don't understand how, in the world of all the work that we in cooperation with our clients put in to normalize and report trade data across different jurisdictions, why a Ponzi scheme can still happen, why a broker can blow up due to managing inappropriate amounts of risk. The information is there, and the prediction and regressive and intelligent information that can come out of that data set is so ripe, and it's an area, if you've been to a few of these, sorry if this is a boring topic, but it's one that I would love to see the top end of this industry, as the regulators, start to have a voice on, because it's an area that could impact a lot of change.
it might be a boring topic, but it's an important one. So looking a little bit in the future, so I think what we can say for the UK, I think with the consumer duty, I think this regulation is done, and I think it will stay as it is. And I think it's a good thing because actually we embrace it, and I think it will also lead to consolidation because the cost of doing business is higher. That's clear, and I think it's good to have a framework. Also in Switzerland, we have a clear regulation. I don't expect anything different here, and I think what the strength of Switzerland is the regulation in digital asset, which is really a business that we really believe in, that it will come and that it will develop further. The question for me is Europe. So we have ESMA, and then we have seen that countries like Spain actually came up with a marketing ban, and of course that's bad regulation because the need for clients to speculate, to make money will always be there. So it's really the regulators, he should have a stringent framework that you can do business so that the good actors are doing the business with good education, with transparency, with fairness as we want to have it at Swissquote, but then regulation that kills the business, of course, that makes it difficult, and that will lead to further consolidation, especially in Europe, because then you really need to be multi-asset. Otherwise, if you're just having CFDs, it will be difficult. So you need the trading and the investment side, the full area, and that's where Swissquote can help because we offer more than 3 million products with all the cryptocurrencies, really. So we can really, for broker partners, help them, serve them the best in the industry.
Yeah, that's right. I think that personalisation, that ability to have a bespoke offering for each of your customer segments is really important, and that diversification of products. But at its heart, you can take what you may have learned from the consumer duty, say, in the UK. It's inevitable parts of that will be transplanted into other regulators over time. But having done it right once makes it far, far easier to do it right a second time in jurisdiction X or Y or Z. And actually then you can start really to build something that's very scalable. And that is what has led to the consolidation, where a number of the smaller players initially in the UK, but then undoubtedly in the rest of Europe and other more advanced regulatory environments, will start to coalesce around a smaller number of big players.
I think regulation is a good thing for the public and also for our business as well. People sitting here as our businessmen, I think when you look at assess the regulation in different jurisdictions, you have to think where is the money, because ultimately we are here to make money, right? For example, for our business, ETFX Connect and ETFX Retail, we want to separate the business. So from 2020, we stopped retail business in UK and in Europe because we see the challenge. We're not like Saxo Bank, we're not like Swissquote. Yeah? You have been in the market for probably more than my age. So we have to take the challenge we can handle. We don't want to take the challenge we cannot handle and we end up, a mad situation. So that's something we need to think from our point of view as a growing broker.
I was going to add, actually, that you all agree that regulation is good because it reinforces the quality of the customer and the securities for the customer, etc. But it also sets up the bar very, very high for new players that want to offer financial services in the industry. The level of things that they need to provide and the structure and the liquidity they need to have and the financing and everything, it sets the bar so high that maybe it will slow down the growth of the industry on that side. Could that be the reason why there is more prop trading firms these days? I know that Andrew has some opinions on prop trading, so maybe we can
I'd start that observation with 5 of the leading brokerage CEOs in the industry did not suggest that regulatory arbitrage is the answer to increasing regulation, and that with some layer of bias of all of these firms, ourselves included, cooperating in being more regulated and reaching that bar. I think we need to be very careful as an industry about how we approach challenges in increased regulation and not approach them by taking steps backwards in terms of how we look at operating in different markets or how we look at skirting around regulations. And our topic of prop trading in this last conversation was short. I think it's appropriate we visit it a bit today because my belief is that there is a legal and above the line way to achieve the regulatory bar that exists today and innovate and operate a prop trading product, a funded trading product, which is an interesting and disruptive innovation. doing so with the same level of honesty, transparency, and execution, understanding of proper management of client funds that we've learned as a developing industry over a number of decades is critical. And that, my concern is, as I've observed the growth and proliferation of interest in this space, is we see firms doing it very well, offering an innovative way to attract and market to clients, offering them the ability to fund an account, funding that account, segregating that account, allowing it to be managed independent of the funded or trial area. And that's a legitimate and interesting business that will challenge regulators to understand how they make sure that the funded trading versus a traditional brokerage model can coalesce. The challenge is where people are looking at this as an opportunity to operate an exponentially more profitable B-book and offering things like funded accounts and then not actually funding an account. That aspect of the business, you don't need a regulator to observe. It's called wire fraud if your website tells a client something's happening and it's not. And that aspect of that space, I think, is due for a quick cleanup. We saw it start in the US, the worldwide innovator in regulation. I think we'll see that sweep very quickly around the world, not necessarily to define what a funded versus prop account is, but to remind us what fraud is when we're not being honest with our clients or ourselves about what we're giving. Sorry, that was a soliloquy.
Anyone wants to add anything?
No, I think, good compliance is license to operate. That's what it is. Good businesses do it well. And then in the UK, you have the SMF regime as well. And that, so that is, for those who don't know what that is, that's the senior manager's function where the key roles within the different organizations has a number against them. And that is direct recourse to the regulator. And that also focuses the mind.
And since we have a little bit less than 4 minutes left, I want to open the floor for questions. Anybody has any questions for our panel? I cannot see very well. No? Everybody's shy today, it seems. In that case, I'm going to ask you a final round of conclusions and predictions for 2024. Maybe we just go in order.
Yeah, so like I started the conversation, I think markets will remain in the same range-bound nature coming into next year. Interest rates are high. Clients are making good returns on fixed income products. One thing that I do factor in is prop trading. I think we're going to see a significant wave of new players entering that market and a significant wave of growth coming on the back of that. So it's something that we have to be very, very cautious of. But I don't think regulation will catch on to that for another 18 months or so. So it's something that us as brokers have the responsibility to be aware of and shy away from and navigate around that. So I think that's going to be a hot topic for next year.
Thank you, Iskandar. Matthew?
I think we'll see a continued wave of consolidation amongst smaller and medium-sized players being acquired by some of the larger organisations. I think as well and I've been saying this for years, but it's a continued theme, I think we continue to see an enormous war for talent, the very best people. That's probably been exacerbated by AI, but we will continue to have to recruit, reward and retain the very best people in good ways in order to grow our businesses on a global scale.
Charles?
Yeah, I think 2024 is the year of the partnership. So wealth managers, banks, they work out what they do particularly well, and they bring in fintech companies to do what they do less well, single technology stacks, multi-asset instruments. I said that before. I think secondly, markets have been very generous this year. So multi-asset manage your risk is very important for me, 2024. It's at the heart of everything I think about and that I believe in. And then I think, if I think about our client base, it's increasingly sophisticated, mobile first, and you are starting to see the intergenerational wealth move. So as the boomers pass on their funds, and how you deal with that, an increasingly sophisticated client base is absolutely key to the long-term success of your business.
Thank you. Ray?
I think I haven't seen a storm yet. The interest rate increase in the past 2 years. For me personally, I haven't seen the result yet. I read some article last week. More than 50% of low-income family in UK have they have failed to pay 1 month or 2 months of mortgage. Traditionally, the higher income will bear the consequence more seriously than the low income for the mortgage. So I'm a bit of a negative for next year. I think there's some stop coming. But some people who in a better condition, it's an opportunity to grab some opportunities from every.
Jan.
I think traders and investors, private and institutional, they learned something this year. They learned basically that it is important to place security, an important role with FTX, with Credit Suisse. So it's all about liquidity ratio, capital ratios, having a strong partner which is regulated, either listed on the stock exchange. I think that makes really the difference. In terms of product, I think fixed interest will stay relevant at the beginning of the year. I think cryptos will come back with the crypto halving, but also with the ETFs that are coming, and I think they will come. And basically, I think also there will be more volatility picks next year because there is still a lot of uncertainty. And we have the US election, so the 5th November will be a big date. Donald Trump is ready, and I think in terms of trading, I think it will be a better year than this year. So we are optimistic in terms of activity of the trading part and also on the interest rate income.
Thank you, Jan. Andrew?
I agree with the group that change is in the air. This is the time where your focus shines and you can demonstrate to the world how you've prepped for an evolving market, interest rate divergence, an election year in the US. We'll be talking to clients on a very focused basis over the next few months into 2024 on systematic hedging coming out of a range market, moving away from the A and B book. We've developed a product to help operate a prop trading business alongside a legitimate brokerage business. I hope if we're all still here in January and we're talking about the success of that. And our role in a data-driven world is a continued area of focus that we wake up and think about every day on behalf of our clients. So that area to demonstrate that delivery and focus and change comes in these shifting markets and changing times. So it will be an exciting year.
Thank you, everybody. I'm going to ask a big round of applause for all of our panelists. Thank you so much for sharing your knowledge.